Welcome to today's market report. European stock markets edged lower on Friday, ending the week on a negative tone as investors study a slew of corporate earnings, particularly from Daimler and economic data releases. DAX in Germany traded 0.1% lower, CAC 40 fell 0.3%, FTSE 100 was down 0.4%. European markets suffered a negative handover from Wall Street, with the major US indices all dropping around 0.9% late Thursday, their biggest slide in 5 weeks, on reports that President Joe Biden is set to propose almost doubling capital gains tax for the wealthy. That said, losses are small, helped by signs of an improving economic picture in Europe as a whole. French and German manufacturing PMI numbers came in better than expected, well above the 50 expansion threshold, while UK retail sales jumped 5.4% on the month in March, climbing 7.2% on the year, way ahead of expectations. European Central Bank President Christine Lagarde assured the market on Thursday that pullbacks in the central bank's emergency program were not under discussion, despite its prediction of a strong rebound in the Eurozone economy from mid-year. This comes as the region starts to get a grip of the latest wave of COVID-19 infections as it ramps up its vaccination program. France, for example, is set to reopen its schools on Monday and lift domestic travel curbs, which started earlier in the month, on 3rd of May. In corporate sector, Daimler stock rose 1.6% after the German car maker raised its profit outlook for 2021, even while warning the global semiconductor chip shortage may continue to affect sales in the second quarter. TOT's stock rose over 8% after LVMH, the French luxury goods retailer, increased its stake in the Italian shoe maker to 10% for around 75 million euros. Liquide stock fell 0.2% after the French industrial gas supplier's revenue dipped slightly in the first quarter, while Remy Cointreau stock slipped 0.4% after the spirits maker reported a slight rise in sales in its fiscal full year. Oil prices edged higher on Friday, boosted by the improving economic conditions in Europe and the US, but concerns about the second wave of COVID-19 cases in India kept a cap on the gains. US crude futures traded 0.7% higher at $61.87 per barrel. The Brent contract rose 0.5% to $65.72 per barrel. Gold futures rose 0.1% to $1,783.70 per ounce. On the FX front, the GBP-USD pair struggled to capitalize on its intraday positive move and retreated few pips from daily tops. The pair was lost in trading around 138.70 to 138.75 region, still up over 0.3% for the day. The pair managed to regain some positive traction on the last trading day of the week, and for now seems to have stalled this week's retracement slide from the key 140 psychological mark. This marked the first day of a positive move in the previous 4 and was exclusively sponsored by the prevalent bearish sentiment surrounding the US dollar. The market now seems convinced with the view that any spike in inflation is likely to be temporary and have been scaling back their expectations for an earlier than anticipated Fed liftoff. This was evident from the fact that the US dollar was largely shrugged off on Thursday's upbeat US jobless claims data and a modest uptick in the US Treasury bond yields. The British pound got an additional boost following the release of better-than-expected UK flash PMI prints for April. This allowed the cable pair to snap 3 consecutive days of the losing streak. Despite the supporting factors, the uptick lacked any strong bullish conviction and stalled just ahead of the 139 round figure mark. Some cross-driven effects stemming from a fresh leg up in the euro against sterling seemed to be the only factor capping gains for the sterling against the dollar pair. This makes it prudent to wait for some follow-through buying before positioning for any further gains. The buying interest around the European currency gathered extra pace and lifted euro-dollar to new daily highs around 120.60 at the end of the week. The US dollar index was 0.2% lower at 91.155, just remaining above the 7-week low of 90.856 seen on Tuesday. Dollar yen was flat at 107.95. Aussie dollar rose 0.3% to 0.7728. The Federal Reserve meeting will be held next week, with investors looking for comments about scaling back monetary easing from the Fed Chair Jerome Powell. This is today's market news. Thanks for listening. We'll see you next time.